What if slavery never ended? It simply changed shape. What if chains were replaced by contracts and masters replaced by institutions? What if the freedom you believe you have, the job you work, the money you owe, the taxes you pay is part of a system engineered centuries ago? A system designed not to free you, but to own you. Because the truth is disturbing. Debt didn't evolve naturally. It was built, constructed, refined, perfected, and today, billions of people live inside a financial structure that quietly repeats one of the oldest systems of control in human history: debt slavery. To understand how we got here, we must uncover the story they never taught you. Debt is older than money, older than banks, older than governments. In early civilizations like Mesopotamia, Babylon, and ancient Egypt, debt was not an economic tool, it was a method of control. When a farmer borrowed grain and couldn't repay, he became a bonded servant. When a family fell behind, children were taken as collateral. Debt was slavery with a signature. But something remarkable happened early in human history. Every few decades, kings declared debt jubilees, mass cancellations, because too much debt threatened the stability of society. If everyone became a slave, nobody remained a taxpayer or soldier. Rulers understood a simple truth: debt controls people, but too much debt destroys nations. Fast forward thousands of years, and the same balance between control and collapse continues to shape the world. The story turns darker in the Middle Ages. Debt was no longer just personal, it became institutional. Powerful families in Venice, Florence, and later Amsterdam discovered something revolutionary. You can lend money to kings and own their kingdoms. Wars were no longer won by armies alone. They were won by creditors. When monarchs couldn't repay their loans, lenders demanded land, trade routes, monopolies, and tax rights. Debt became a silent empire, one that didn't need armies because it owned the armies. Then came the biggest shift in world history. In 1694, England was bankrupt from war with France. To save itself, Parliament allowed private lenders to create a central bank, the Bank of England. In return for funding the war, the lenders received something beyond imagination: the right to create money out of debt. Every pound issued was a loan. Every loan carried interest. Every interest payment enslaved future taxpayers. A new system was born, a system where governments borrow, banks create money, citizens repay the interest, not through choice, but through taxes. Debt slavery had entered its modern form. This model spread like wildfire: Holland, France, Prussia, and eventually the United States. Central banks became the silent architects of national destiny. By the 20th century, debt was no longer a national tool, it became a global weapon. After World War II, the IMF and World Bank were created under the promise of development. But what actually happened? Poor nations borrowed, interests piled up, resources were collateral, policies were controlled. Countries rich in oil, minerals, and farmland suddenly found themselves trapped, not by conquerors but by spreadsheets. This new form of control wasn't called slavery. It was called economic assistance, and the enforcer of the system, the US dollar, the currency almost all global debt was denominated in. But the most powerful shift happened in 1971, when money itself lost its anchor. When President Richard Nixon ended the gold standard, the world entered uncharted territory. Money was no longer backed by metal. It was backed by nothing but belief. And if money has no limits, debt has no limits. Governments could borrow infinitely. Banks could lend infinitely. Consumers could spend infinitely. But every dollar created was debt, and every debt required repayment. Not by governments, not by banks, but by workers. Inflation became the silent tax. Interest became the silent chain. The system was brilliant and brutal, because the more money created, the more debt enslaved the people holding it. When debt grew too large, governments didn't cancel it, they extended it. When nations defaulted, banks refinanced them. When citizens couldn't repay loans, credit scores were invented to measure obedience. When inflation rose, wages stagnated. Every attempt to fix the system created new layers of dependency: student loans, mortgages, national debt, corporate debt, credit cards, medical debt. Auto loans debt became woven into every part of life. A system that once bound ancient farmers now binds modern workers. A system that once enslaved families now enslaves entire nations. Here's where the illusion becomes undeniable. Global debt today is over $313 trillion, more than 3 times the GDP of the entire world. Average American household debt, $103,000. Over 45 million Americans trapped in student loans. Most countries spend more on interest payments than healthcare or education. Debt is no longer a consequence, it is the system. We don't live in a world of free workers, we live in a world of managed debtors, and the chains, not iron but digital numbers on a screen. The pattern that began in ancient Babylon continues in modern banks. Only the tools have changed. The purpose has not. Takeaway 1. Debt has always been a tool of control. from ancient kingdoms to modern nations. Takeaway 2. The modern financial system isn't built on money but on interest, and interest demands endless human labor. Takeaway 3. Debt slavery today is subtle, disguised as opportunity, convenience, and economic growth, but the effect is the same: long-term dependence. Warning: we are living inside a system designed not to free humanity, but to manage it. And history shows something terrifying. When debt becomes too large, societies break. Not peacefully, not slowly, but suddenly. The question now is not if the system collapses, but when and who will pay the price.